Ladies and gentlemen, Kei Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market looks like flat here on the S&P. I think Nasdaq went to slightly negative towards close. Banks are up. I think about 1.3% or 5% or something like that. They were up quite a bit at some point, but we did see that fade towards the end of the day today. We're gonna talk about it, trying to figure out what that fade means going into tomorrow and remainder this year, which we have a half day tomorrow, right? So we got half day tomorrow, and then we got 28th, 29th, 30th, and the 31st. So got 4 trading sessions next week. So we've been talking a lot about the levels, right? And so we talked about on last night's video that bears or the buyers need to get above 369 or 41 or so, something like that, 368. We did that. We did see that gap up today. So this is where it closed yesterday, and it was getting very hectic here below my short-term moving average. It's been acting as resistance for some time, and then we did see a gap up on the first hour, and they continued on second, third, and fourth, and then on the 5th hour, just right on that pivot or the resistance there, right? It's kind of sort of a short-term pivot there, right? Resistance, support, resistance, resistance, and then we found that level. We came down. That's the 5th hour, and that's the last hour, and we did come down and retest the gap area and the short-term moving average area. We're hanging around there actually pretty much most of the 6th hour. The last 20 minutes or so, last 10 minutes or so, we start breaking below it and came down and filled the gap. There are a couple things here. So the gap got filled. So when the gap gets filled, let's be fair here for the buyers also, because we've been fair with the bears. Remember we talked about there's a gap here, right? So when the gap gets filled, what happens is it's going to act as instant resistance. If it's a down gap, it's going to act as instant resistance. If it's up gap, it's going to act as instant support. So that gap right there was filled, and then we did act as resistance. It didn't come all the way back down though, but we're just hanging around there for a day or so, pretty much all throughout the day. That did that level where that gap was filled act as a resistance there. Now with this move, right, that gap was filled. I mean, there's a slight little bit of gap remaining, just a little bit. Let's just call that filled. We did the same thing here. There's a little bit of gap remained here. Also, we call that filled. So let's call that filled. So the gap got filled, and we're going to look at this level as a support, right? This level here. So the gap just got filled, and we're going to assume that we're gonna see that level of support. So right now, a few things that are kind of slightly negative for the bulls is that we're not able to stay above my short-term moving average. I mean, it's been acting as resistance for quite some time, pretty much all throughout this week. And we kind of want to see flipping back that short-term moving average acting as support. However, we kind of saw something similar here. Right? Isn't that interesting? We had a similar sequence also. We saw a gap up first. We saw that from here. And it was very similar because it's been at that short-term moving average has been acting as a resistance pretty much throughout the days here back in early to mid-December. And then we gapped up. And this time it faded right away. And then it started coming down pretty hard. Broke below my short-term moving average. We even filled this gap and kept tanking on the last hour. But it's crazy how quickly next day it gapped up and continued higher. So pretty much what this did, just shaking people out, right? Trapping the bulls to close out their longs, getting stopped out in panic. Maybe the bears to, when we saw a big gap up here, maybe have these short-term bears to close out their puts, and then, with loss, and then maybe get them back in here before this thing getting back up. So again, this kind of stuff happens quite a bit in the market, and I don't really look at that. I mean, I call them a shenanigan because, normal circumstances, you know what I mean, the market, after market gets to a certain level, we see a gap up, we cultivate that higher high. We did that in the short term, right? We saw that higher high. without the shenanigan, market tends to, if it's a conventional, right, normal circumstances, usually market will come back, maybe retest certain level and get up, right? And market likes to do that. Market likes to retest certain levels and stuff like that. But once in a while, right, they like to create shenanigan just so that it's going to throw you off, right? And so I wouldn't look at shenanigan as like some kind of crazy thing happening in the market. I'll look at it as, you know what, that's something this market likes to do here and there just to shake people out, right? Just so that you lose faith in technical analysis. You're like, what? You see, none of those technical level worked, man. But more, and I've been analyzing this market with you, right? There, I don't know how many videos out there since the March lows. I've gone to the daily videos. Because remember, keep in mind, for years, I've only done videos once a week. Since the March lows, I think I started around the March lows, I think maybe early April, late March, I started doing these videos on a daily basis. And so you've seen it. If you've been following me since then, you've seen how, as I navigate this market with you, how this market loves to, respect these levels. But there were times where market will perform shenanigans. And that's not something like crazy. It's just it needs that. It needs to shake people out. That's why it's important when there's a shenanigan happens, you understand a bigger picture. Anyway, so we saw that, right? The gap just got filled here. This was back in mid-December. And then we didn't see, because conventionally, when the gap gets filled, it normally would act as support. And here you can see that there was this doji candle showing us that there was a little bit dip buying activities and market respecting the gap area. But the last hour, we just puked. And I think a lot of people at this moment, right, a lot of people are being pretty bearish in the market. And next day, what happened in the market? It just gapped up. And why does these kind of things happen? Well, these kind of things happen in an uptrend, right? That's why, when I look at not only the micro term and the short term, but also the mid term. So you understand what are we as far as a trend is concerned in the mid term, because there will be shenanigans and stuff like that in the micro and short term. But if you understand the longer term, then you can, what I mean? You won't be shaken out. So here, it's not really a crazy shaken out today. It's just that we didn't see that support or that short-term moving average not acting as support, and then the gap just got filled, and we didn't get below it. Not like this one. We filled the gap, and then we kept going lower, and that's actually kind of rare to see. Again, that's why it's a shenanigan, right? Because a lot of times when the gap gets filled, you can go back and check every single gap that got filled. A lot of times that level, very close to it, will act as support. But once in a while, you see shenanigan like this just to throw you off. Here, we didn't see this thing coming way down. We actually filled the gap, and we just kind of hung there, and we, closed the market. So here's the thing. Only way bears can make this work, because there's a lot of support here with the gap just got filled, and this is going to be acting as support because we did cultivate that higher high here. Right? That's still higher high. Despite the fact that we saw that shenanigan, can we all agree that this low is still lower than this low? So what can we say about this guy and these two lows? Higher lows and higher highs. Obviously, we didn't know that until next day when this thing gapped up, but we can say that when this happened, and you can go back and check what I was saying back in December 14th, right? We can still say that that's still in the vicinity of higher low, and we need to see if there's going to be a follow through or not. Next time we just gapped it. And I'm not saying we're just going to gap up tomorrow, but I actually, because of the cultivation, right? What's the definition of a downtrend? Lower highs and lower lows. This to me look like equal highs, right? And then we got the low here. And this is kind of a higher low, slight higher low. And this low is definitely, as of today, we don't know for sure how the market is going to behave tomorrow. As of today, with the data that is at hand, that low is definitely higher than this low. This low is definitely higher than this low. Kind of like that low and that low. So as of today, in the micro term, we're talking just last couple of days, I'm gonna still be neutral in the micro term, right? I also gave it neutral yesterday, and you can see we're neutral, pretty much flat. So we're still neutral in the micro term. However, in the short term, trend has improved. I'm gonna lean towards bullish to neutral, right? But yesterday, I think I was neutral, just flat neutral on the short term, but it has improved today because of this cultivation, right? Because we made a move, we did see a pullback, market is flat on the day. However, that cultivation makes kind of a big difference because we no longer have lower highs anymore. We got the equal highs now. So now I am changing the sentiment in the short term, bullish slash neutral. Bullish slash neutral. Bullish because we got kind of an equal highs here. We're no longer lower highs. If you look at it this way, we kind of got that higher highs and higher lows. That's why it's bullish. I'm saying kind of neutral because we're kind of still in that range here. That's why, right? So I think best case scenario for the buyers, obviously, is gapping it up. Same thing with the bears. Gapping down is probably the only option. Actually, gapping down might be the only option for the bears because gap just got filled. That's going to act as support. And there's this support right here. It's been acting as support pretty much a couple of days here, that 366 level. So probably gapping it down so that bears don't have to deal with that gap filled support and 367, 366 support. So I kind of feel like only option for bears would be gapping it down. For bulls, finding support here, trying to gap back up above the short-term moving averages, similar to right here. There were some shenanigans there, right? We got below short-term moving average, how quickly it gapped up next day, and then you see how it stayed up above my short-term moving average, and then it thrusted for several days here. You saw that move, right? So that's what buyers want to do, is gap back above the short-term moving average as quickly as possible. Let's check out that oscillator, let you guys go with this. So the oscillator is kind of similar form here also, right? We essentially made a move here similar to here. We actually curled up. And despite the fact that we did see 2 hours of a downturn, oscillator is still elevated and crossed up, right? So it hasn't crossed down, we're still elevated, and we're still crossed up. We're still getting into that higher high zone here. And we saw something similar here, right? And then see the little pullback and then got back up to the top of its band. So oscillator is essentially still rising. And there it's saying, despite the fact that we did see 2 hours of downturn, there still is a bullish momentum, right? So I'll come back for you tomorrow. We'll see how this market its progress and how the oscillator is looking. If the market is able to got back up above the short-term moving average, or the bears made us a move tomorrow by gapping it down. So tomorrow, come back for you. Enjoy your evening and good luck trading tomorrow.